For years, bonds were seen as the slow, predictable cousin of stocks, safe but uninspiring. Yet in 2025, that narrative has shifted. As markets grow volatile and interest rates stabilize, bonds are once again capturing the attention of smart investors. They offer balance, steady income, and resilience when uncertainty reigns. This script uncovers why bonds are quietly regaining their power in modern portfolios and why the most strategic investors are now calling them the comeback star of the financial world. 10. A shelter from market volatility. When markets fluctuate wildly, bonds act as a stabilizing force. Unlike stocks, they provide predictable interest payments and a clearer outlook on returns. In uncertain economic times, investors value security over speculation, and bonds deliver exactly that. Experts say a diversified portfolio with solid bond exposure can soften the blow of stock market downturns. 9. Rising yields after rate hikes. After years of ultra-low interest rates, recent hikes have made bond yields far more attractive. For the first time in a decade, investors can earn meaningful returns from relatively safe instruments. Treasury bonds, corporate bonds, and municipal bonds now offer yields that rival certain dividend stocks. This shift has sparked renewed interest among conservative and moderate investors alike. Bonds are once again serving their traditional purpose, providing consistent, reliable income without exposing portfolios to excessive market risk. 8. Predictable income in uncertain times. Bonds stand out because they promise regular interest payments, something that brings peace of mind when inflation or economic anxiety dominates. Investors nearing retirement especially value this reliability, as it allows for stable planning and reduced stress. Unlike equities that may plunge overnight, bonds offer structure and security. Experts recommend laddering maturities to ensure steady income across years. In a world where unpredictability is the norm, bonds are once again the calm anchor investors can depend on. 7. Diversification for balanced portfolios. The smartest investors know that true security lies in diversification, not chasing trends. Bonds complement equities by reducing portfolio volatility and cushioning losses when markets fall. Their inverse correlation to stocks often makes them a safe haven during financial turbulence. Experts emphasize that even aggressive investors benefit from a healthy bond allocation. The renewed appreciation for balance rather than all-out risk-taking has made bonds a vital part of modern investment strategy once again. 6. Safer corporate bond opportunities. Corporations with strong credit ratings are now issuing bonds with appealing yields, offering investors a secure way to earn returns without taking equity-level risk. The bond market has matured, providing access to investment-grade and high-yield options depending on appetite and strategy. Investors can choose bonds tailored to their comfort and income goals. Experts highlight that corporate bonds, when researched well, deliver both safety and profitability, making them a preferred choice in times of global uncertainty. 5. Inflation protection through smart bond choices. While inflation remains a concern, specific bond types like Treasury, inflation-protected securities, TIPS, provide a built-in defense. These instruments adjust their principal value with inflation, ensuring that purchasing power remains intact. Smart investors are diversifying with such bonds to hedge against long-term price increases. Experts also note that combining TIPS with short-duration bonds can strengthen resilience. Bonds are not just static tools. They can be strategically structured to protect wealth in any economic climate. 4. Global stability and currency safety. In times of global tension, or geopolitical shifts, investors often move their money towards stability, and bonds, especially US Treasuries, are the go-to choice. They represent not just income, but safety of capital. As global markets wobble, demand for stable currencies and fixed income securities grows. Experts explain that foreign investors increasingly buy US bonds to safeguard against regional volatility. This international confidence reinforces why bonds remain an anchor of trust in the modern financial landscape. 3. Rebalancing after a decade of stock dominance. The last decade was dominated by stock market enthusiasm, but cycles always turn. With equities facing correction risks, bonds are helping investors rebalance. A strategic allocation toward fixed income restores portfolio health, ensuring smoother returns over time. Financial advisors note that this recalibration prevents emotional decision-making during downturns. The comeback of bonds reflects not nostalgia, but logic. Diversification is timeless, and now investors are rediscovering its enduring power. 2. Lower default risk and higher transparency. Unlike speculative assets, bonds provide clear contractual terms, maturity dates, coupon payments, and principal guarantees. This transparency builds investor confidence, especially when uncertainty clouds other markets. Government and blue-chip corporate bonds carry significantly lower default risk than most alternatives. Experts say the clarity and predictability of bonds make them the ideal choice for cautious investors seeking both safety and steady returns. This reliability explains their strong resurgence in 2025 investment portfolios. 1. The return of the prudent investor mindset.
I got that fire in my blood, under my skin. I feel like a god, ain't no stopping me. I got that fire in my blood, under my skin. I went through the flames and they set me free.
In the rush for quick profits, many forget that real wealth grows steadily, not recklessly. Bonds have made their comeback not through hype, but through timeless value. They prove that slow, steady, and secure still wins the race. If this video helped you understand the smart investor's move toward bonds, tap the like button, share it with others making financial decisions, and subscribe for more deep insights to strengthen your portfolio and protect your future wealth.